So let's talk about the scalping technique that I use on the daily basis, which allows me to make a living from day trading monthly. All you have to really do, first and foremost, I'll talk about is understanding market structure when it comes to this simple way of scalping the future markets, whether it's the NASDAQ or the ES or the Dow, whatever it is, your favorite instrument to trade. Just pay attention today and you'll kind of pick up some pointers. You have to understand market structure, and basically all that is for those that are first-time viewers and are probably starting off down the path of wanting to try to or understand the trade. It's understanding the higher highs and higher low movements, okay, and understanding the reversals of in which the market can potentially make when it's either moving to the upside or to the downside, okay? Because even though the market reverses, we never know as retail traders how long the market's going to move in that particular direction. You may get an area where the market starts to make it's moving to the upside, say like right here, and then it starts to break structure lower, and then it immediately starts pushing back higher, and it may come back up and take out this high. So you have to be able to understand and read the flow of the market in order to be able to scalp the correct way using this technique. So what I always recommend to anyone watching is always, from a top-down analysis, start with the higher base chart. The higher base chart is going to put you in the driver's seat to let you know which way the market is moving, because ultimately you want to trade in the direction of the market. Do not trade against the grain, or you will get stopped out. You're going to lose some money. You may blow your account. So please pay attention. First and foremost, if I was looking at this today, for example, and this was the current market conditions, what I would see is just the market moving to the upside, okay, swinging up, making these higher highs and higher lows. And I'm going to show you just a quick rundown when it comes to like structure, whatever the case is. The market pushes up here, it pulls back. We get a break to the upside right here. So if we did something like this, pull back, breaking to the upside, okay, pulling back, breaking structure again to the upside, pull back, breaking structure again to the upside. So you can see that the market is constantly making this higher high and higher low movement, okay? Then if we turn the opposite direction, and just to let you know, what I'm working you through is pretty much the strategy and what I do on a daily basis that allows me to make a living from trading futures each and every month. So then the market turns back around and then we start to move to the downside. You have to determine where are the areas in which the market is breaking structure. Where are we taking out you see these higher lows that we made? Where is it that we're taking out these significant lows? All right, back to the downside. So this was an area of structure. So if the market pushes below this point right here, okay, below this point right here, then we will be breaking structure back down to the, well, it's one of the key signals or first steps in which we should be looking for maybe a trend change in the market, okay? Because we want to see where the market is taking out lows back to the downside. So where I say it pushed to the downside right here and it pulls back, so it's breaking structure below this area right here, and well, say right here, when it pushes down, it's breaking below this area and this area. At that point, then the market has broken through two areas of structure, okay? It took out a low here and it took out a low right here. When I see that, then that helps me identify that now that we're no longer bullish but bearish at this point. So then the market is doing this right here, as you can see, pulling back, breaking lower, breaking through this area of structure here, here, and then it pulls back here, okay, as you can see, and then it pushes lower, all right? Now, we never took out this area of structure right here quite yet. If we're breaking structure below this area and right here, then this will be, if we're moving to the downside, a supply area, okay, right here. Supply setup. Broke down, pull back, wick the bottom of this area here, first breaker structure here. And would I be interested in taking this opportunity to go short? Yes, I mean, in the sense that we have broke structure lower here, breaking this. We also took out a minor swing or minor breaker structure right here. We had a minor breaker structure when the market broke below this area right here. But what I'm trying to say is I prefer to see where it's breaking and taking out, a significant major, like a high or a low. In this case here, breaking below this low here and taking out prior structure as it moved to the downside. So it took out this low here. So I preferably would wait, but this is a valid opportunity to take a supply because we took out a low here, but it's a minor area structure and then took this low out here. So typically what you want to see is where the market is doing something like this. So if we're bullish, we're breaking structure to the upside. You could treat like this low right here. There would be like this representation of this low right here. Then we make the first low lower high, and then we have a structure break. So we're breaking below this area here, which will be below here. And then when we push lower, we're breaking below this area here, which is right here. So you want to see that, okay? So yes, it would be like the first break of structure to the downside. And typically speaking, the first breaks would be a key identifier that the market is trying to push lower. But to really understand and really identify and receive more confirmation is you want to wait for another structural break to the downside. This one, the first one, and then where it's coming down, taking structure out to the left-hand side of the chart as well. Okay, so once the market pushes lower here, all right, and then pulls back, you can see what it's doing. It kind of chops around this area right here. Then it pulls back. So it made a low right here as it was pushing lower, pulls back, breaks lower right here. Is this a valid area where you can take in? Is this a supply area? Yeah, if the market pulls back here, you can look to go short. But just be mindful because there could be key areas, which the market could stop at. It could be some area of support. It could be a round number like right here at 20,000. It came shortly below that and then moved back to the upside. So you could have half numbers. Just be careful when you do take, say, areas where you're going short. For example, right here, what's below you? Is there a round number, half number, things of that nature right there. But either way, we can see the market is now moving to the downside, pulls back even more right here, and then it pushes even harder to the downside. So pull back, push down here, pull back, and then it breaks structure lower. This is a pullback to this key, to an area of supply right here, but there's also one right here. All right, but it just pulled back right here, tapped the area of supply, and then boom, push lower to the downside. Okay, so what I want to show you is the portion that what I'm covering right there is just pretty much kind of market structure in a nutshell. Understanding the higher highs and higher lows, knowing when the reversal signs are taking place, to look for where you may have been having a bias of going long as it was moving to the upside, to where now maybe looking to the downside, looking at it because it's breaking structure lower. So this is what it looks like when the market's making these lower lows and lower highs, breaking structure to the downside. And then it pulls back right here. We're breaking structure lower again. Now, from there, the market, we came all the way down here to say 60, and it turns around. Okay, so you have to be able to understand that, again, that it can turn around at any given point. And I'm trying to work you up to the strategy, which I'm going to show you from a top-down analysis to the downside, where we're using a lower base chart. So a higher base chart, a lower base chart, marking up an area structure, starting with the higher base chart, which is my 120 range. Now, for all those that trade other styles of charts or different types of charts, maybe you trade time-based charts or tick or whatever it may be. Same process, just marking up a higher, understanding and depicting the direction of the market first, and then marking up the higher base chart, all in following and understanding what direction you're in, the market's moving in, and then marking your zone up on a higher base chart. Supply and demand is what I'm talking about. So the market here pulls back again, pushes lower. This will be an area where it breaks structure if it breaks to the upside. It broke to the upside here, pull back, it broke to the upside right here. So now we're in bullish mode back to the upside here, because we went from a bearish cycle or to the downside, and now reversing back to the upside right here. So this will be a pullback, break a structure higher again. And then now we have this this demand zone resting right here and one below it, okay? When it breaks lower here, yes, it does break structure right here, but that doesn't mean that we're going to be 100% bearish at this point. This is the first break of structure, and if it pulled back to an area of supply because you look for a short, yes, but look what happens. It breaks right through it, blasts through it. We're still bullish, okay? We're still bullish. You could just, if you can't see it, then you could actually just kind of draw a channel a channel to the upside, say like for right here. Okay, you can see we're bullish. It does pull back pretty significant, but it's tapping into the second area of demand resting right below there. Okay, now this is into the London session of the morning. Don't pay attention to the time frame. I'm just showing you what you'll see when it comes to the movement of the market, specifically into the New York session or any session in particular. You just needed to understand what's going on. But this is a pullback to a key area of demand. Now, once I have this area of demand marked up on my higher base chart, all I'm doing now to finish out the remaining portion of the strategy, from top-down analysis, as we're looking for using this scalping technique to make money and be profitable on a daily. It's just moving down to a lower base chart. This is in which I move down to, or where I move down to my 24 range chart. Now, once I move down to my lower base chart, the larger zone is that same zone I just showed you on the higher base chart, the 120 range. Okay, that's a demand zone right there. All right. One thing you want to be mindful and always pay attention to is you're looking for where there's a gap, back at the zone. I'll talk about the gaps in plenty of videos, but where there's a small gap resting on back at the zone. This is probably just maybe a couple points right here. But basically where you have the top end of the last bearish candle to the downside, the wick of it, say for example, and then this candle that breaks above this bearish candle right here is this bullish candle here. Then you wait for that next candle to close above it. Excuse me. And then any space in between from the top end of the wick of that bearish candle in between the third candle right there down to include the wick of it, where you have a gap of the body of in between the body of, in this second candle right here. So basically it's just the top end of the wick of the candle, the bearish candle, the third candle that closes bullish to the upside. Okay. How far does it pull back? Okay. So is there any space between the top end of that wick of that candle here and the bottom end of the wick of that candle, that bullish candle right there? So it's basically the measurement of this second candle that breaks to the upside in a sense. Okay. So any space in between is what I'm trying to say on this candle right here that breaks to the upside for the first time, that breaks and closes above this this last down bearish candle right here. So you see this candle here that pushes up, second candle closes above this bearish candle here to the upside. Third candle closes above the bullish candle. So it's the gap in between the third candle back to the bearish candle, which is the space which is in between that area will be the space of the body of that in between the body of the second candle. Okay, so hopefully that makes sense. If not, kind of watch some of the video content, and I talk about more so about gaps, unmitigated zones. They're the same thing, and what I look for. I definitely want to see a gap resting back at the zone, if that makes sense. That increases. All that does is help me increase the probability of the trade, in a sense, from measuring it or determining it to be either low probability or high probability. This case here, because we do have a gap resting back at the zone right here, this marks this zone as a high probability zone, if that makes sense. So I mark the zone up, then I move down to my 24 range. This pullback right here you see is the pullback just like right here. Okay, we tap the zone. Once we tap into the higher base zone, I'm looking on the inside. And I only do this for a specific reason right here. Identifying a smaller zone inside of the larger 120 range zone. So this right here, when we push to the upside, this was a break of structure above this high right here. Okay, and there is also a small 24 range demand zone. Okay, resting on the inside of that 120 range demand zone. It just gives us more it gives us more confluence with using two charts. Okay, the more confluence you have, the better the trade is going to work out in your favor. This is the scalping technique that I use, on a daily basis. Not all times where there be a smaller unmitigated or area or a zone on the 24 range chart on the inside of the 120 where there is a zone that has no gap. Okay, and sometimes it will, sometimes it won't be, and in cases like that, what I would do then is see that once it pulls back, let's say there's not a smaller zone like this right here on the inside of the larger zone, then I'll wait to see if there's going to be any if I can get a structure break on the 24 range after it tapped into, say, the 120 range at that large box right there. So if it tapped in to the zone here and we didn't have the smaller zone, then I'll look to see if there's a structure break to the upside on the on the 24 range, and then a pullback to that demand zone that just formed on the 24 range. But I want to make sure, I have to see where it broke structure on the 24, it pulls back back to the inside of the 120 just as well. Okay, just giving me confluence. But in this case here, in instances where you have, or setups where you do have a smaller zone resting on the inside of the larger zone. So two demand zones, the 120 range demand zone and then the 24R demand zone. It just increases the probability of a trade working out in your favor. And as you can see, when it came there and tapped that zone there, both zones pretty much, it tapped the higher base, tapped into it, then the smaller zone right here. Let me blow this up so you can see what I'm talking about. For people who really can't see it, hopefully we'll be able to. That's it. See, there's a gap in between the top end of that bearish candle right there, the wick, second candle close above it, third candle. So on the second candle, the body of that second candle, back down to right here, the top end of the wick of that bearish candle, the body of that, there's a gap right there on that second candle. So the market didn't come back and fill it. So which means there's an imbalance resting right there. There's a gap there which the market has to fill. And when it does do that, squeeze it back in so we can see, and taps into it, we're looking for the break and close of a candle above. When we get that, look what it does. It takes off to the upside. And I always talk about, here's what you can do. There's two things. People say, well, what do you look for? A 1-to-1, 1-to-2? I typically look for my first 20 points, and I take out, most position or all my position off there. You can also, for all those, I like to use the risk reward, type, strategy in a sense, or technique. You can use a risk reward. So your trade, what you'd be looking to get into, it would be like right here. Your stop would go on the back end right here. And then, this would be a 1-to-2 because it automatically sets up that way on NinjaTrader. But 1-to-1 will put you at, what's going on here? Give me 1 second. Getting in around about 19,967 and taking out at 19,980. So that's about 14 points right there. You can do that, or you can aim for higher. What you could do then, like if you're going for 1-to-1, pick up those 14 points right there. Actually, that's 13 points. I'm sorry. 13 points right there, and take off most of your position and then leave a runner. So if you're in, let's say you're in the market with 2 contracts, then take one contract off at 80 or 81, and then leave a runner. Okay, so and then you may be asking like, okay, so how do I leave a runner? What should I do? Well, typically, what if I do this, I take my position off here, pick up those 13 points. The market pushes up, it pulls back. Okay, so then I'll wait for the break above the swing right here. When it does that, then I'll bring my stop right here. So each time it makes a new higher low, I'm moving it up to the next higher low. So once it pushes up, pulls back, and breaks higher, I'll move the stop from here to here. Okay, then it pushes up, pulls back, breaks higher again. I move the stop from here to here. So each time it makes a new higher low, you can bring up your stop, is all I'm trying to say. But you can go in for the first 1-to-1. You can go in for the first 20. Sometimes, not all cases, where you get the 20 points. So if you start to see where, the market's pushed up, if it comes back 2 candles back against you and you're getting close to break even, you may want to think about, closing the trade out. I typically stay in my trades because I'm confident about them, but I know a lot of people have smaller accounts and they may not be able to weather the drawdown. So you can close the position out to protect your capital and then just wait for another setup. But again, for a quick 1-to-1, it's for anyone that's looking to get in and get out the market. For a quick 1-to-1, you could pick up 13 points right there. And typically speaking, the market's going to give you a 1-to-1 on nice setups like this, where you basically have, multi-chart confluence, the higher base zone, 120 zone, and a lower base 24-hour zone. You're waiting for the rejection, break and close of the candle, then go long, go for the first 1-to-1, and then leave a trailing, then leave a runner. Okay, if it makes sense. But that's pretty much all I wanted to share with you today, was just, showing you the scalping technique. And this is all scalping. I'm not swing trading or position trading, but just practice it, watch the video content. And the more you spend time on the channel watching the video content, the more you understand it. Because I keep talking about the same thing over and over about higher base chart, lower base chart. Looking for a higher base zone first, then moving down to the lower base zone and seeing, is there a zone inside that zone? Okay. If not, then you're either going to have to wait for a structural break on the 24-hour to happen and a pullback, to inside the zone again, or just pass it all up and look for another setup. Okay. Sometimes, excuse me, you may not get a bunch of setups off the 120. Some people like to move down and use lower base charts to look for setups. Nothing wrong with that. If you're doing that, say for example, you're looking for maybe setups off the 24. Okay. Nothing wrong with that. It's just that the fact is that you're going to have to eliminate a lot of the noise, meaning there's going to be a lot more price action, as well as you want to make sure definitely you are looking at the higher base chart to trade in the direction of what you see going on with market structure. Okay. But if you strictly want to use the 120 and 24-hour, setup, then, and you can't find any setups for the day on the, say NASDAQ, then look at some other markets. Maybe look at the Dow, the ES, some other markets. I mean, if you have a watch list of different markets that you're looking at, you're bound to find at least a setup or two a day. Okay, even if you got to kind of look across those 3 different markets. All right, so I'm just putting that out there. Kind of be mindful of that as well. But for all those that aren't current subscribers, please take the time, go ahead, click on that sub button down below. Make sure you become a subscriber to the channel. Turn your post notifications on. If you want to also receive further insight, meaning about trades that I take, okay, you can become an elite member. Okay, it's only $6.99. It's a private community for those that are interested to receive the trade breakdowns, which have helped people out tremendously. That's where I go into detail about trade setups. I break them down so that you understand, about the market structure. Talk about why I was interested in taking that trade, what brought me to or led me up to taking that trade, as well as where to place your stop loss and where to place your profit target areas at. Okay, so there's a whole lot of trade breakdown videos already posted on there that you can watch that will help you out, because the more you do it, the more you spend time on the charts, the more you'll start to understand, as well as you get the video playlist and a great video that I covered on market structure. For anyone interested, it's only $6.99 a month. You find the link right down in the description portion of the video. Right under the Discord, you'll see a link that says Discord. You'll see another link that says Become an Elite Member. Once you click on that link, 2 tiers will pop up. Make sure to choose a tier for $6.99, and then it will give you direct access to it. That's all I have, okay? But yeah, if you're not a current subscriber, please take the time. Click on that sub button right now. If you found value in today's video, please make sure to click on the like button before you leave the video. I definitely appreciate it. And that's it. Okay, everyone, enjoy the rest of your weekend, and hopefully, I wish everyone the best of luck into the markets this week and make some money.